To close out day one, we're ending on a high note with a look at the next big wave of fintech innovation coming out of the Asia Pacific region. From embedded finance in Indonesia to AI driven platforms in Hong Kong. This session explores the ideas, technologies, and talent fueling the regional next generation of unicorns. The perfect way to wrap up the day full of energy and a glimpse into the future fintech in APAC. Please join me in welcoming our moderator, Jayne Chan, Head of Startups at InvestHK, and our innovators. Thank you.
Thank you so much. Thank you. And it's a real pleasure to be here to talk about startups in APAC. It's one of my favorite subjects. And I've got some fantastic guests with me today as well, actually. We've got Pamela Lee, who is Head of Sales for APAC for Talos. Over here, we've got Mike Wang, who is a Global Sales Director for Go Markets. And here we've got Dr. Jinder. Oh, I had it so good before, didn't I? Joginder Paul Kundi, who's an adjunct professor at City U. So maybe I can just ask each one of you just to give like a quick intro about you, your background, your company, and then we'll jump right into the questions.
So I can start first. So my name is Pamela. I run sales in APAC for Talos. My background has always been in FX actually. So it's great to be back here. So I used to be from Almex, but right now Talos, we are a leading market infrastructure trading player for digital assets. Right, so we are a Series B funded $1 billion valuation. Been in the space for about 8 years now, and what we do is really providing top grade access, institutional grade liquidity, front to back solutions for our clients.
Thanks, Pamela. My name is Mike. I came from Melbourne, so I'm a global sales director for Go Markets. Before I joined Go Markets, that was probably 10 years ago. I used to work at IG for 5 years. Then before IG, I was used to work at one of the Australian banking for stockbroking services. So in the past 16 years, I've been working for the broking and online trading industry after I graduated from the uni.
Thank you, Mike. Firstly, it's really nice to be here. My name is Dr. Jag Kundi. I work as a scholar practitioner. Basically, that means I work both within the university, teaching, researching in the area of digital assets, and then equally, I work with startups and help them to scale up, provide mentorship, raise funding for them. So actually apply theory and practice, because I think the best thing universities can do is really bridge the gap between theory and practice by bringing people together through business. Thank you.
Great, thank you. And let's jump right into it. We're talking about APAC is becoming a global hotspot for fintech. I mean, it's the kind of challenges we see in the region is very different from other areas, and we've really seen a lot of fintech companies rising to the challenge of that and developing, different kind of solutions to see how finance is accessed, how it's scaled, how it's trusted. What sectors in APAC fintech actually do you think is actually really prime for success in your view, based on your background? Actually, Mike, I'm going to jump to you first.
Yeah, sure. As being the global sales team, leading the sales team in the past few years, we've seen a lot of startup companies, especially in the APAC regions. Actually previously, they are trying to find partners, or especially a VC, to get enough funds to get them to keep growing. But I can see in the past few years, especially the trend that the momentum has been changed, especially for those small or startup fintech companies. They start looking for a relatively mature or big partners instead of running alone. So they're trying to get into those ecosystem of those large partners, so which will help them to grow faster and more stable, or we can say sustainable in the future. So which means those investors behind the fintech, they are more confident, they're willing to invest more, and we can see a better return rate from those startup companies. So that's basically in the past few years what I can see. They used to running alone, but now they're trying to find a major partner from day one, which will give them more time and more sustainable way to grow in the future.
Right, so you're talking about all types of industry sectors within the whole fintech industry, or are you especially highlighting a particular subsector that you think is, particularly wants to get those big clients?
That's right. Well, given my industry experience, I haven't been working for other industries. So in the last 16 years, I've been working for the online trading industry alone. That's why. So most of those fintech companies we've been working with or partner with usually will be the online trading related, or we can say derivative companies. For example, AI-driven analysis company, we maybe risk modeling companies, or instant funding, instant onboarding companies, those kind of startup companies. We used to deal with them alone. Now they're trying to partner with one of those big players on the market, and actually get into those big players' ecosystem to make them sustainable and live for longer period of time, and obviously increase the success rate for those startup companies.
And what about you, Pamela? What kind of things are you seeing that are you predicting is going to be really big, or is already, making a big inroads in Asia?
Thanks for your question. I think it's an exciting time for us to talk about this, also because we are starting to see convergence between traditional finance and digital assets. So for myself, I think the most prime for success is definitely areas that I will highlight, like crypto infrastructure and also blockchain. And I think the main reason is these are not new concepts anymore, because we are already seeing real world adoption. Right, and that's the key here, because Talos recently we announced a partnership with BlackRock, right? And BlackRock, as you know, is one of the largest asset manager, where Talos OEMS is integrated into BlackRock Aladdin, right? And what it means basically is traditional institutions are looking for this integrated workflow that massive asset managers are very, very used to. Right, and I think the next decade of fintech where we are seeing is just not about crypto anymore, and it's about firms that can actually build that trust layer that could connect traditional assets into digital rails, right? And this will enable a whole range of efficiency, right? It's like how we have emails, right? Not replacing communication, but make it faster. And when you have blockchain-based systems to make settlements faster, custody or value transfers, I think this will actually drive the momentum in Asia very, very differently.
Yeah, I think the whole blockchain side, I think in one of the previous panels, the Web3 panel was also talking about how, the large institutions are starting to become much more on board with it all. Jag, you're coming from a more academic research perspective. Do you have a view on what you think is particularly strong in Asia for this sector?
Yes, thank you, Pamela. I think within Asia, one of the key factors is demographics. If you look at three countries, China, 1.4 billion people, India, 1.46 billion people, Indonesia, 285 million people. Add these three countries together, 3.15 billion. Out of a total world population of 8 billion, 40%. All very young, all very tech savvy, all wanting access to tools, technologies now. I think this is one fundamental difference, because when you look at the Western economies now, you have aging demographics as opposed to young demographics as we have in Asia Pacific. So I think this conversion of these ingredients, these demographics and also economics, we look at sort of two perspectives. At the base of the pyramid, the younger population is still relatively unbanked or underbanked in Asia. According to the World Bank, 70% of Asian people are unbanked or underbanked. So there's a massive opportunity here if you can start adding digital rails to finance, traditional finance. If you can look at doing credit scoring, not based on where you live, how long you've been in a property, etc., but use more innovative solutions. I think it creates a massive, massive opportunity. So to go back to your original question here, Jayne, what are the key industries? Well, tokenization now, I think, is on everybody's tongue. And when we start looking at real-world assets, one of the most illiquid markets in the world is property, real estate. Savills, in their recent report at the end of September 2025, quoted just under $400 trillion of assets in the global real estate market. All of this is very, very illiquid. Illiquid meaning you can't buy and sell. You have to be a very high net worth individual or institutional investor to be able to access these markets. Now, with tokenization, one of the key, most powerful functions is that it allows anybody, everybody, with access to the internet to access these type of properties 24/7 through fractional accessibility. So it's going to open up huge spaces, I think, for all of us in Asia Pacific in the way we're going to move forward. We're already seeing that at the bottom of the pyramid with the underbanked, but then at the more sort of SME, middle class, these areas are increasing. Chinese middle class is increasing, Indian middle class is increasing, wealth tech. For them, they want to know, well, what do we do with all this money we've generated now? So I see a boom in these spaces because at the moment, the traditional finance is not really catered to scale up at speed to service these people. And I think this is where all the fintechs will jump in. And that's what we're seeing. They are literally jumping in because the other key factor that's needed in this equation is regulatory clarity. Governments in Asia now are very, very clear what you can do, what you can't do. Singapore has actually a fantastic set of rules via the MAS. Hong Kong now has introduced clarity on their stablecoin regulation at the end of August. So suddenly we know what we can do. We know what the boundaries we can push and where we can't push. So now investment will move in from this as well. Thank you.
Yeah, brings up very good points. I mean, you're all talking about, potential infrastructure to support traditional large institutions, as well as the opportunity with, the huge numbers, sort of like the population numbers. I mean, underbanked. I mean, some of these fintechs can enable these, a lot of these underbanked to jump straight into that, don't they? They don't even have to go to the traditional financial institutions anymore. It is a great opportunity, but you also brought up the regulation aspects, and for this, I'm actually going to jump to Pamela and talk a little bit more about the regulation side. So, APAC, we've seen, the hubs, the major financial hubs coming up with various types of regulations that really is pushing that whole kind of digital asset space. And Jag just mentioned, specifically, Singapore, Hong Kong. How is this evolving regulatory landscape impacting the development of institutional digital asset infrastructure?
Thanks for the question. And I think running sales in the APAC, right, I'm actually in the forefront in the sense that we are engaging regulators globally, right, not just in US, but also in Singapore, in Hong Kong, in Japan, in the role of educating them, because a lot of them are still learning the frameworks and things like that, and adopting best practices from each other, right? So I think what I would say in the past 2 years is the conversations have really shifted. Regulators are now, instead of just broad consultation, into actual rulemaking, right? And we see that starting from Singapore, where they have licenses, regimes to stablecoin issuers like Paxos, payments providers like OKX or even GrabPay have like stablecoins, merchants, payments, right? And all this gives a greater level of clarity for institutions to be able to build compliant and scalable products, which probably previously there was just a major hesitation, right? And moving back to Hong Kong, I think things are also accelerating in a positive way with the stablecoin ordinance. I think even if you look at the Hong Kong-backed stablecoin with StanChart, Animoca, even traditional banks that used to be sitting by the sidelines, right? They are actually redefining this infrastructure, right? And what's interesting to note here is every jurisdiction is trying to find their niche, right? For example, in Singapore, they are trying to focus on regulatory alignment across different regions and cross-border payments interoperability, whereas for Hong Kong, it's acting as a bridge between mainland China as well as global liquidity access, right? So I think everyone is trying to find where they fit and having proper frameworks to scale that. And what this means, actually, I feel is it doesn't mean that having regulation is actually slowing down innovation. I would think it's the opposite, where it's actually accelerating institutional adoption, because the clearer the rules you have, the faster digital asset infrastructure companies like us can build, right? And this will actually drive that momentum that we really want in the space.
Yeah, I think that's a good point, actually. I think, most people, maybe not in this industry, but some people outside the industry thinks that with regulation, it holds back a lot of innovation. It basically stops the startups from really pushing the innovative ideas and things. And we've seen, I mean, just even in Hong Kong, we've had, some of the major digital asset exchanges, crypto exchanges started here in Hong Kong, back 8-10 years ago, and some of the world's biggest crypto.com, FTX, and all these other kind of exchanges. And a lot of them actually jumped from country to country as soon as a place had like a framework, or starting to get a framework, they just thought, okay, I actually prefer operating in a little bit of a grey area, and they actually go to different locations. But I do think, that when the regulations come on board, it basically it provides like a clearer rules of game, like you say, Pamela, to the large institutions. And bringing in large institutions means more money, so therefore more adoption as well, isn't it? But just going to you, Mike, I mean, we were talking about, traditional finance and how the industry is applying tech and innovation to actually reshape how people are accessing and using financial services. So as a global sales director at Go Markets, where do you see the fintech companies really disrupting traditional finance most effectively?
Well, in the past few years, as leading for several teams at the Go Markets, I've seen actually some quite of changes for the startup and fintech companies. I wouldn't say disrupting. Probably I will use changing or improving instead, because especially for online trading industry, previously for every single client, it takes probably a few days to get them to onboard, and not mention another few days, 1 or 2 business days to get the funds across. Then activation and the whole journey takes maybe 2 or 3 business days. But now in the past few years, especially 2 years, we have seen a lot of changes, especially the fintech companies, which are the companies helping the company like us to improve the client user experience. And nowadays we can see the instant funding, instant onboardings, mobile trading, and especially AI tools as well. Most of the clients are using the AI tools, ChatGPT or other AI robots, to basically help them to find the best products and also select the platforms and the providers as well. So I think in the last few months or last few years especially, the fintech has helped the traditional finance like us. We provide a better user experience, transparency, and especially changing or improving previously the complex financial products into a very easy to use, everyday thing, simple tools for most of non-background investors or traditional, we can say, mom and dad investors. That's what I can see in the last few years.
And I think, you bring up a very good point, actually. It's like the startups can actually, improve different areas. But they, being a small company, they often lack trust. Or, if they were trying to do that market themselves, it would be very hard for them to get the same level of traction. And this is where you come in, Jag. You're looking, some of your research has been on blockchain and its impact on governance, on trust. So how do you think the startups can leverage blockchain technology to improve that transparency and to include trust, especially where, everything you're reading at the moment on, digital assets is there's still, people are still talking about fraud and all these kind of things. I mean, how do you see this? What kind of factors do you see to win investor confidence as well as scaling to that unicorn status?
Thank you, Jane. That's, again, a great question. I'm not sure we have enough time for it, though.
So a quick one.
So I'm sure you've all heard of blockchain, okay? And the idea is that blockchain is an immutable record. It's auditable. It's verifiable. So all of these plus factors. Now, for a startup, who knows you? Nobody. But you're asking for money. Who's going to give you money when they don't know you? So the idea with the blockchain is, okay, when we can put all our transactions, all our voting, all our equity, cap tables, etc., onto a blockchain, which is auditable, verifiable, immutable, meaning non-changeable, then suddenly we create digital trust. Or in fact, the trust and transparency, let's call it trustless transparency. The system itself creates the trust between all the parties. The downside of this is many of the kind of intermediaries you have within the kind of financial, legal, accounting kind of areas, you can disintermediate. And I think probably this is one reason why there's a slow adoption here as well. Because again, you talked of disruption earlier, Mike. I think we haven't seen the full impacts yet due to AI, due to these new technologies of digital or going onto pure digital platforms. I think there will be fundamental changes in the way we do things. Simply because there's no need to do it the old way when there's a quicker, faster, cheaper way to do it the modern way. Okay, so coming back, the blockchain can provide the trust that's needed. So once the trust is there, that reduces something, we use the term information asymmetry. the investors have more information about all the good and bad news. Sorry, the startup has all the information about the good or bad news. The funders don't. Now with blockchain, where they can access any transaction, it's on a blockchain, they can access it, they can check it, they can verify it, they can audit it. Suddenly that information asymmetry is reduced to a level where it's a level playing field. We all know what's going on. So suddenly now, stewardship, accountability, transparency, these issues become not that important because, hey, it's all on the system. It's all accessible anytime, 24/7. So suddenly now, that relationship between funders, startups, is actually stronger because if your transactions are all on the blockchain, you have a basis of creating that digital trust that I mentioned earlier. And that then can create all kinds of spin-offs. If things are on a blockchain, then obviously the tokenization element comes in. Tokenization is a way that now you can create fractional interest in shares. So instead of going to one investor, I could go to thousands of investors. And because it's all on a digital platform, I don't need the high expense of the intermediary cost to make it viable to go to 1,000 investors. So suddenly my model of raising finance suddenly changes quite dramatically compared to the old way of doing this. And I think, these technologies, these new processes are coming in at this stage. They're not quite there yet. We're seeing more and more investment coming in. The regulatory environment we talked of earlier is changing, making it more pro-friendly, not just to the crypto, but to anything digital, particularly the digital asset space. And I think that will just accelerate more and more now. The regulations are becoming friendly, investors are looking at this more positively, and even retail investors now, mom and pops, you mentioned, Mike, they can access these type of investment, which previously they couldn't. You had to be a high net worth individual or a sophisticated investor. Now suddenly I can raise money through anybody, everybody, through blockchain, through tokenization, and obviously I've not mentioned yet smart contracts. Smart contracts allow me to automate transactions based on predefined milestones. So I don't need third parties to test and verify. The smart contract will execute itself. Again, another disintermediation, another cost saving, another trust building factor. Suddenly, it's a different ballgame in how you're raising money, how you're communicating with your investors. In fact, your investors have immediate access to all your transactions on a blockchain. So all of these, let's say, features, advantages are slowly coming through. As we're getting more and more deeper down that rabbit hole in using these technologies, it's becoming more apparent on how they can change the way we fundamentally do business. Thank you.
It is a bit scary though, isn't it? It's like, I keep thinking about my parents potentially buying like a tokenized like property or something gold. I was just thinking, oh my God, it really is quite scary.
Just to jump in there, when you said tokenized property, you mentioned earlier, Pamela, about the ideas that different countries are all trying to find their niche. So if you go to places like Dubai for the moment, they are tokenizing property in a humongous way. Most of their property transactions now are all tokenized. And the fastest tokenization of, I think it was a $400,000 apartment in Dubai took 2 minutes on token. And the cheapest token was $1,000.
Oh my gosh. Yeah. I mean, Hong Kong being such a place with, where property revolves, around in the various industries, it's going to be here as well. But Mike, I'm actually going to jump to you and just talking about a little bit more about early stage funding. So, early stage funding, strategic partnerships can actually really make or break emerging and early stage companies. What trends are you seeing in APAC around funding sources, investor appetites, and the role of partnerships in accelerating growth?
Yep, that's right. In the past few years, especially for APAC regions, we have partnered with quite a few startup and fintech companies. As I mentioned probably at the very beginning of the conversation, as I said initially, when we deal with them a few years ago, they're quite small. They're looking to survive, to be very honest. They're looking to get one of the most reputable buyer to give them a big contract so they can survive for the next 6 months or maybe 12 months. Even though the product is very competitive with other providers, but given the cash flow and other things, those startup companies or fintech companies, they're very fragile or they're very easy to maybe collapse in the 6 or 12 months. So after maybe a few more failed cases or experiences, those startup companies, especially the owner of those startup companies, they realized that at the beginning, 6 or maybe 12 months, are a very critical time for them to survive. So instead of finding one of the buyers, they're looking to partner with one of the big players instead. So for example, 5 years ago, when we deal with those external contract, they're trying to sell us maybe a 3 months or 6 months supply contract, which is still a shorter period of time. But nowadays, they're looking to integrate into our system instead. So it's not about the traditional fixed payment, but rather than a performance-based profit sharing, or maybe another way of that both parties we're willing to, for providers like Go Market, willing to pay more if it can be proven it works, right? So instead of paying the fixed fees to the startup or fintech companies, we allow them to get into our ecosystem so they can get into our global database, to our infrastructure and the compliance regulatory. But we are providing them those kind of resources. In return, they provide us a more technical ways, a better user experience, and other technology that can improve our trading experience and the user experience, which can benefit both parties. So the trend I can say in the past few years is, instead of those startup or fintech companies, instead of finding a one buyer, they're trying to get into the players' ecosystem. So they're not looking for a short-term period of contract or survive, but instead they're looking to grow with those big players.
Yeah, by embedding themselves into your organization, like you
That's
say,
right.
if they put money where their mouth is and their technology is really good, then they will get that traction, and the
course.
fact that they partner with a larger company, they get that exposure.
That's right. It's not about find the money, find the funds. It's
Yeah.
more about find the right partners. You can work together and grow together.
Right. So let's switch it up a little bit, Pamela. I'm going to jump to you, and I'm going to talk about, women in technology. It's a topic very dear to my heart, actually. You're a big advocate for women in crypto and fintech, and women, even though in finance they're actually, very prevalent, but in the tech space they're still underrepresented. From your experience, what can the industry do better to support and empower women? Female leaders and APAC's digital asset ecosystem. What else can we do more?
Yeah, thanks for your question. And for context, I run a Women in Web3 community in Singapore with over 100 different members, right? So what we see, or what we usually speak to our members, is that it's still underrepresented, especially in areas where it comes to leadership, product, or technical roles, right? And a few things I think I can share that could help. I think one is allowing women to have the visibility and voice. And the thing here is representation actually matters, right? Because women yourself, when you hear other women actually being involved in decision-making process, it actually changes the way you view your career trajectory, right? And a lot of times when I speak to young women leaders, the reason why they come into the crypto or fintech space is actually because they hear another women perspective at an industry event. Secondly, I would say mentorship and sponsorship is very, very critical. And it's just not about having women into the industry. I think it's also giving them access to senior women leaders that can advocate their growth. And this is so important because in the fintech space or digital asset space, technology and regulations keeps evolving. So you really need someone to guide them to actually navigate a lot of these complexities, right? Thirdly, companies ourselves, I think we should all lead by example. Inclusive hiring opportunities, supporting flexible work models, or even empowering women in the innovation process itself, not just giving them compliance or operational roles, right? And I think a lot of things can start by now, right? By celebrating women that are already building, whether you are a founder, whether you are a product manager, right? I think the more visible these success stories we have in APAC, I think that will encourage and empower more women to actually come into this space.
Yeah, I completely agree. I think that just that constant exposure and just showcasing women doing this, it is so important. I mean, and I hear people saying, not this topic again and whatever, but it's just something we just got to reiterate. But oftentimes it's actually education, getting women early into technology that really matters. And this is where I'm jumping to Jag, because obviously you're teaching at City U, you're helping develop talent. How do we make sure that, for example, the females are really encouraged to do the technology courses, but also to making sure that your graduates come out that is ready for the workforce and, with technology changing so quick. I mean, gosh, how many rounds of AI sort of, versions have we had just for ChatGPT, for example? So what do you do to try and ensure that we've got that relevance?
Thank you, Pamela. Sorry, Jane. Okay.
It's okay.
I think at City U, what we try and do is look at a very interdisciplinary approach, where we're not simply giving the old way of learning. The old way of learning is based on a model of 500 years old. You have a lecture, you have a professor at the front and simply teach, and everybody's quickly making notes, writing things down. I think that kind of learning is changing in the world today. People have shorter attention spans, people want bite-sized information, and people want relevant information rather than just theory. So bridging this gap between theory and practice is one thing City U is doing in a number of ways. Firstly, we have a 5-year plan, 2025 to 2030, which is specifically about innovation and excellence. And underpinning innovation and excellence is AI and digital. So when I say AI, at City U, we're not afraid of using ChatGPT. We encourage the students to use these technologies in their study, in their research. Sure, they can write the essays, but we can see this as well. Our idea is to create interpretation and analytical skills. The time spent on the research, the technology can make this much easier, quicker, faster than them doing it themselves. So actually their output is what we're interested in more and more, and the process they're going through this. Another way we're encouraging this is we have very, very deep industry collaboration. So within City U, we encourage your startup idea to become the next big idea. How do we do this? We have a specific venture fund called the HK Tech 300. HK Tech 300 is basically trying to create the next 300 large unicorns or large scale companies. Okay, this is not for the small idea, this is for the next big breakthroughs. And for those of you out there who are interested in this, just for the idea to a viable idea, from a concept to a viable idea, funding is available for this. 100,000 Hong Kong dollars is available for this. Then we have incubators, accelerators, we have hubs. And just recently, in fact very recently, just at the end of September, early October, we signed an agreement with Sinovation. Sinovation is an actual VC fund in Hong Kong, funding many, many Chinese companies and Asia Pacific companies. City U has signed a program with them now where we will give live mentoring, live access to VCs, live testing, prototyping, piloting of your products in a live test environment, not in a laboratory, divorced away from everything. Not like a sandbox environment is what I'm trying to say. So this way you can actually learn. And one other advantage I think we have at City U is internships. We actually arrange internships overseas with companies. So you also get a more global mindset as opposed to just a very local mindset. You're training, working with cross cultures, working with different pressures, different environment. It actually helps you fine-tune your end product in the way you go to market as well, and your customer base. Because at the end of the day, the technologies we're all building here is not for a country, it's not for a region, it's not for one university. These are global technologies. And we're going to be part of the global community to understand how do we service our customers, how do we create those great universal experiences, customer experiences, how do we help the customer with a light or soft touch, long touch on their journey in utilizing these services. And just one last point. The other way we're doing this now at City U as well is the collaboration we have with overseas universities. So we encourage all our students, they have options to study at Cambridge, Harvard, MIT, 1 term, 2 terms, depending on their major, depending on what they want to do. So they can also get industry best practices coming back into the community. We also bring in professors from around the world to come and teach. And we have what's called the scholar practitioners, people who are actually working in industry as opposed to just theoretical research all the time. That way we're creating that DNA, that core of curiosity, understanding of how these technologies can impact and improve our lives, as opposed to just passing exams. Thank you.
It sounds great, actually. And on that note, if anyone wants to find out more about, startups, technology, next week is Hong Kong FinTech Week. I'm just doing a quick plug. And it's Start Me Up Hong Kong Festival at HKCEC. If anyone's interested, please come along. But can I say just a massive thank you to my wonderful panelists. We've got Dr. Jagindra Paul Kunde and Mike Wang and Pamela Lee. Thank you so much.
Thanks,
Thank
Jane.
you.